Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX. It's around 9 a.m. coming to you from the trading floor on this Friday, December the 12th. I haven't been with you for a period of days now as I've been traveling. It's good to be back here once again, able to communicate. Today, I want to focus on three pivotal issues that will shape agriculture and the ag economy in 2026. I think these are pivotal issues and two of them we should learn a great deal about here in the weeks ahead, although the third will have to wait. And I'm going to start with that third one because it's the quickest and easiest and the most understandable, and that's weather. Every year, weather is a pivotal factor for the ag commodities and for the energy commodities. For that standpoint, as we look ahead, it looks like we're going to be moving from a weak to moderate La Nina this winter into a neutral to maybe even a weak to moderate El Nino as we go forward into our northern hemisphere growing season and year ahead. That tends to be favorable overall for growing conditions, but the weather models were really wrong this last year, and so we'll have to see how this year shapes out. Once you get past 10 days, your accuracy drops below 50%. So we'll see. But weather is always pivotal. Every farmer loves a drought for somebody else. That's going to tighten supplies and increase the prices they have for a good crop. And so we'll see. We'll watch the major production areas of the world and see if we see any big weather developments. But if not, we could continue with an adequate or ample supply situation. If we do, we could quickly tighten things up depending on the scope and location of those weather issues. So that's always there every year. That's a given. Now let's go to issue number two, and that is going to be China and the trade deal that was reached between President Trump and President Xi in a handshake on October 30th. We still don't have the details of that. We were told 12 million metric tons by the end of 2025, with 25 million metric tons in each of the next 3 calendar years. China never confirmed that, nor did they debate it either. They did start buying and they continue to buy. Since then, we have seen the White House back off and say, well, that's by February. And then they said, well, that's for the growing season. And I think what they probably meant by that is marketing year. The marketing year goes from September 1 to August 31. And that wouldn't surprise me. And that's what I was assuming, that even if they bought 12 million metric tons by the end of December, and even if they do buy 12 million metric tons by the end of December, I still don't expect them to take delivery of it immediately. I think it'll be spread out over the remaining of the marketing year. And then the 25 million metric tons allegedly committed to for calendar year 2026, even if they start buying it in the current year, I don't expect them to take delivery of it until the next marketing year after September 1. So I've always been looking at this from a marketing year standpoint. So that doesn't change the way I view things. So we really need to see that 12 million metric tons in order to even give us a chance to hitting USDA's target for the current marketing year. We're way behind. The 12 million metric tons is about 441 million bushels. We're about 367 million bushels below the previous year's marketing year-to-date sales as of November 13th, the latest data available at the time of this recording from USDA, because they're still trying to catch up from the partial government shutdown. And so we'll see where we're at going forward. If and we anticipate getting the details of that agreement any day now, and the White House tells us other commodities are going to be included in it as well, and that's what's taken so long, is to negotiate volumes for the other commodities. Now, China has said they're going to only import a very minimal amount of corn this next year and maybe a minimal amount of grain sorghum, but we anticipate grain sorghum being a part of this trade agreement. We anticipate wheat being a part of this agreement. They've already purchased small amounts of wheat and grain sorghum. Not much mention of corn. The potential is there for a significant amount of corn to be purchased. What do I mean by that? USDA has its prediction for this last year's crop production in China about 5 million metric tons smaller than China, with a year-on-year drawdown of about 25, 26 million metric tons. China's reserves are vast. They're a state secret, but China's very insecure in letting those reserves draw down. Now, their production estimate is higher. Their usage estimate is lower. They don't see the same drawdown. Are they covering it up? Are they being realistic? What we don't know, we don't know. But the potential, I would still say, is there for significant corn purchases. That's not a prediction, but I'm saying if they would choose to do so, they could make some significant corn purchases. So that is another thing to watch. What is the final trade deal? And do they keep it? If we look at the phase one trade deal during Trump 1.0, they had a 58% compliance on that. So that's not very good. That's their history, not very good compliance. But if they do, that is good. And if they don't, it could be anywhere from bearish to neutral, even supportive, depending on what the level or scope of that compliance is. Now, that brings us to the third point. The third pivotal issue I see EPA's final regulations on biofuel. They've already indicated to us that they want to significantly increase the RVO, the blending requirement. We have the 45Z financing of the tax credits. We're looking for the RIN values. EPA said 50% RIN value on imported feedstock. The industry is saying, no, we want it to be 100%. We're getting some indications that there may be a compromise here to continue to support agriculture via the biofuel program while also trying to appease the industry and allow for imports of feedstocks if there are insufficient supplies of domestic feedstocks. And so that might mean giving 75 to 100% value of the RINs for imported feedstocks, but then taking the small refinery exemptions and reassessing a large portion of them toward the larger refineries. We could see the RIN blending mandate go from 7.1 million, or excuse me, billion, 7.1 billion RINs to as high as 8.8 billion. Either way, we believe it is supportive. Now, what are the final regulations? We don't know. We're speculating, but based on our analysis of EPA and this administration's behavior to this point, we're cautiously optimistic that it's going to be good for strong domestic biofuel, but it's also going to take some time to get the biofuel structure totally built up to replace the lost China business, which we eventually will lose China. This trade deal helps bridge that gap until we get that domestic biofuel program done. So we don't have to necessarily see full compliance if we get this strong biofuel program from the EPA. And we anticipate at this point that announcement hopefully by mid-January. It could come at any time, but we don't see the indications of that yet. So the current thinking is by mid-January, by Martin Luther King Day, so to speak, as maybe a target. So we'll be monitoring that. Both China's involvement, its commitment, the details of that agreement, and how aggressive it's going to be in keeping that, as well as the biofuel program, we should have answers to in the next 4 to 5 weeks. The weather situation will wait until our major growing season in the summer. Those three issues should be pivotal to shaping this coming year. Do we begin a recovery in the ag economy? Do we slip lower? We are cautiously optimistic at this point, but these are the unknowns we're waiting for answers for. In the meantime, I hope you have a pleasant and happy holiday end of the year period. We will be back with you with more updates here in the days ahead. And we'll be back with you as those issues unfold. Be sure to like and subscribe in order to continue to get these updates from the trading floor.